Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our free video report for Wednesday, November 15th, 2017. Yesterday I sent out just a little briefing about what Woody was saying on November 2nd about how we were going to be looking for some strength going into that time period, and then from there we were going to be looking for weakness. And so far, that's pretty much what we have seen. And one thing I just want to make clear is we have a lot of new people in here. We're not fortune tellers. We can't read the future 100% of the time. But you have someone like Woody Dorsey that's been doing this for over 40 years. And I've mentioned this plenty of times where, some of the largest financial institutions in the world pay him tens of thousands of dollars for his institutional newsletter. And what we're offering, it's a slimmed down version of that, but you're still getting one of the masters of market timing, as well as one of the pioneers of investor sentiment and tracking the psychological aspect of the stock market. And it's something that you're not really going to be able to find anywhere else. And I'm not going to try to sell it to people that don't understand the importance of it, but knowing how people are feeling about the market and keeping track of it gives you an advantage that I would say 99% of the traders out there, they don't know about. And when you trade stuff that everybody knows about, it's really not a secret. But when you are using tools that nobody knows about, it gives you an advantage. And like I said, these aren't are the turn dates that we have, and that let's say the predicted or the time period that we're looking for a reversal or maybe a sharp reversal, they're not going to be right 100% of the time. But that's why we put stops in place. But it doesn't change the fact that you still have one of the best market timers in the world, because nobody's going to be right 100% of the time. But you have somebody that's going to be right a majority of the time and going to get the big moves. And that's really what we look to do, and try to keep our members knowing in advance what to expect. And we have a number of different matrix that we follow to guide them in that direction. So, our main thing is to help members make better trading decisions, because whether you're a trader or a swing trader or investor, the key to making money is putting the odds on your side. And like I said, nobody's going to be 100% correct all of the time, but the market can be predicted, and it's going to be, especially in the short term, in with a high degree of accuracy. And a lot of our members have been around for 4 years because they've seen this, and they know that things aren't going to go right 100% of the time. But you know what? If they're right 85 or 90% of the time, then they're able to make money on these big swings when everybody's leaning in the wrong direction. So it's a there's a code that it follows, and Woody's been doing this for 40 years, and he knows the code, and he knows how to follow it, and he knows the patterns that it follows. And that's what we relay over to our members. And the matrix that we follow is it's fairly simple. It's a time, and that's what he's the turn dates that he's looking for, where the market is going to either make a top or a bottom. And so that's to expect a reversal in time. Sentiment is what that kind of confirms the upcoming reversal time period, because if traders are all leaning on the bullish side like they have with this particular run, nobody's expecting it to go down. But that is when you start to get worried about where it is, especially when you have technicals that are confirming both the time as well as the sentiment. And that's the third aspect of this. And I'm going to go through this in detail in this in this video. But this is what I pointed out yesterday. And like I said, this is our November 2nd newsletter, and this is the advantage that people have, because everybody, I would say, again, going to the 98, 99% of traders, they're reactive traders, meaning that they'll stay in something until they're forced out or forced into into another position, whether it be long or short. But usually when they're forced into that position, it's when the market's going to be turning again. And the way that the institutions, the way that they use this, use things is they'll take the euphoria in the market and they'll start building short positions because when they're up in that level, they know when things are going to turn, and they don't mind if the market goes up some, that they're just going to short at a better price. It's the same that if you're looking for a low or looking to buy, if you start buying and then the market goes down a little bit, you're just getting it at a better price with keeping in mind that the market is going to reverse to the upside. So they knew back on November 7th that November 2nd that we were looking for upside stabs, and it's going to continue into the week of the 13th, and that's pretty much what happened. So now that the high sentiment readings suggest that the degree of further upside will be muted, which is exactly what's pretty much happened. We saw stabs to the upside and then it came right back down again. And what this pattern, again, this is somebody that's been following the market for 40 years, for some of the largest financial institutions in the world, is saying that this pattern's inferring that a surprising sell-off into, now again, our members know what that date is. So they'll know when we're going into that time period to start covering shorts and start either looking long. But then after that, we are looking for a very bullish move. And that's, again, we know when these dates are. And people that aren't members don't know these dates, so you can take guesses at it. And then, what happens is we'll get emails that we were wrong, but they were wrong because they didn't know when these dates were. So knowing when to expect this market to either make a top or a bottom, whether it be an intermediate term, long term, or a short term, gives members an advantage because they're able to position their portfolio before the move happens. And if it doesn't happen right then, it doesn't mean that it makes let's say if you're looking for a low, but the market goes up a few more days after the particular turn date, it doesn't mean that the whole not the knowing of the market going down has changed. It just means it's just it's distracted a little bit, and it's going to take a couple more days. But as you've seen, we did see the market go down, and we know when to expect the low to come in. And this is what I mean by what the institutions do. They're shorting at the euphoria, and we come in and people start panicking because right now we're right around here. We're not even close to the panic or fear. So people are just kind of in denial because we made the top, and we're just kind of chopping around. But then when it goes down, this is when the panic happens. And guess what? Institutions are covering and they start building their long position, and it's probably going to be on these dates. So this is what I was talking about with the sentiment where, everybody's bullish on this market right now. You can see our overall moving averages going down, so it's diverging with the actual price. And again, it's just another aspect of what we use to take a look at when this market is going to be reversing. But again, look at all how everybody's bullish on this market, and when everybody gets bearish, those are the lows. So knowing how sentiment is and how to read it, which Woody does, gives us an advantage to know when to start looking for a top or a bottom. And you'll see these high sentiment readings here. This was at a breakout, so this is not bearish at all. When we start getting here and it starts getting choppy, now it's getting bearish because everybody's bullish on the market, but we're struggling to go up. So let's take a look at some of the other things here. This is what I pointed out in the last video report, that we had the McClellan summation index that had made a cross, and basically when we've ever had these crosses before, really the minimum that we've had was of anywhere from a 50 to 100 point drop. So last week I was saying we're not even close to that yet. Now you can see the market starting to roll over, but this is the second thing that I use as far as a confirmation, and this is the advanced decline. And when this gets a bearish divergence like we're seeing here, where the advanced decline fails to make new highs as the price does, that's where we get larger drops, as you can see here. So these are confirmation that we know sentiment was high. We know we had a turn date coming in here. With the internals were breaking down, and if we just take a look at what our regular technicals are doing, they were diverging. And then if you remember back on the 6th, I pointed out this wedge pattern that was in place, and I said the target was going to be someplace down between 25.60 and 25.45, and we came pretty close to that. So that was, again, we knew we were in a topping period. We had sentiment that was extremely everybody was bullish on the market when everybody should have been starting to look on the downside. We know that we had institutions that were selling up here, and we are in a time period that things were looking to break down, and that's exactly what has happened. So again, we had the time period here that was there. We had the sentiment, we had the bearish divergences, and here you can see we had the pattern that was pointing lower, and this is a nice move. So should you short right now? No, you have to. We have pivots that we're watching. I have a feeling at some point they're going to try to fill these gaps. Maybe we have to go down further before that, but we're getting close to the oversold levels. So if we come into the 25.54, if it breaks through that, then I would keep an eye on the 25.48, and through that, that's where we're going to get a little bit of a panic down to the 25.28. Now, here's another thing: is we have these gap omens that are in place. We got one filled today that filled this one, but we still have one down at the 25.38 as well as the 25.17. So these are potential targets, and here's again an expanding top. So there was plenty of reasons to believe that that we were, making a topping pattern. And this was what I mean by where it gets choppy, where we made a new high, came down, made a new high, came down. This one got a little extended, but from there, that's when we started coming down. Now we're making lower lows and lower highs. So you can see the dynamic is changing, but we still make some kind of rounded top first. So I wouldn't be surprised if we come up and bounce up to the 25.80 at some point. But again, timing wise is looking down. So I wouldn't be trading the long side for this. If I would just sit there and manage my short positions, if we get a bounce, I'd be looking to layer in short positions, because again, we know when to expect the lows to come in, and we're not here right now. So I'm going to take any kind of rally and short it until that low period comes in. But when that low period comes in, that's when I'm going to start looking to build a long position. And you just repeat the cycle over and over and over, and that's what happens. But sometimes you're going to get into those extended moves like we just saw. It gets boring. There's nothing really to talk about. But then when things start to get exciting again, this is where I like to trade, because there's a lot of money to be made both on the long side and the short side. And that's all we need is volatility. And from there, you can just follow the sentiment matrix that's in place. And when you see everybody that's bullish on the market, it's time to look short if we're at a turn point. And then when everybody's panicking, it's time to look long. So with that, again, this, the pattern that we were looking at basically got hit. It's from this spot here, which is when I put this out, almost about 40 points. So not a bad move. And that's it. But there's going to be more to the downside, because once this wave 5 is complete, which I believe it may be, we're still setting up this wave 5 of 3, and from there these are going to be some downside targets. So we know when this can carry out into, and if this is the pattern that's in play, it's going to be a lot of points to the downside, but we're not there yet. So keep an eye on a 25.42. We break through that, we're probably going to see some panic. And until next week, have a great night, and I'll talk to you guys.